you don't know, right? So let me tell you what happened over the weekend if you don't know. President Trump announced that starting tomorrow, there will be 25% tariffs on both Canada and Mexico, a 10% tariff on China. Now, this obviously has markets certainly in a bit of turmoil this morning. We'll go through that in just a minute. Two things really come out of this. So first of all, the difference between now and 2017 when he enacted tariffs last time is that we did tax cuts first, which gave a relief to consumers, and then we did tariffs. We didn't do that this time. We put tariffs before tax cuts. So there's a lot of proposals for tax cuts. No tax on Social Security, no tax on tips, no tax on overtime. That's great, but we don't have that done yet. All right, let's talk a little bit about tariffs. So lots of concerns over the weekend, tons of headlines. And again, just be careful who you read, as always. I got tons of emails almost right away. This guy said this. This is, this is the thing that sparks the next massive inflation surge of the 70s. No, it doesn't. This is the next thing that's going to cause the market to crash. No, it's not. It's certainly going to weigh on markets short term, for sure, as we kind of process through this. But markets will adapt to this fairly quickly. And a couple of things are important, right? You also have to understand what the context of the tariffs are in terms of future pressures, right? Are these tariffs permanent? And these tariffs aren't being used for a permanent outcome, at least not yet. Now, it could, but we've already seen him use tariffs twice so far, and apparently Mexico and Canada don't get it. Panama and Colombia got it, right? So announced tariffs, 25% tariff on Colombia to make sure that they would bring back their illegal immigrants, and they immediately complied and no tariffs on Colombia, right? Panama, same threat. Panama over the weekend terminated their deal with China. So apparently those leaders get what the impact of tariffs are, but apparently Claudia and Trudeau, Mr. Justin, who has now resigned in shame from Canada, don't get it, right? So their immediate response was as well, we're going to retaliate back. Well, you didn't read the tariff announcement, which was if you retaliate, it's more tariffs, right? All he wants is, though, and this is something that'll be discussed, they're going to have calls obviously today between these leaders, is what he's saying is look, I'm imposing a 25% tariff on you to get, so you will take some action to reduce the illegal immigrant flow and fentanyl flow into the U.S. His goal with tariffs is only to help assist with the efforts that we're already doing in the U.S. to stem the flow of border crossings in the U.S. By the way, the number of border encounters since Trump took office has dropped 94%. So doesn't take much, right? Peter Hegseth, who is the new nominee that just got nominated, has just announced basically that he's declaring the cartels as a terrorist organization, something that probably should have been done years ago, but has now declared them terrorist organizations, which means now that the U.S. can take military action against them, against these cartels that are all along the border. But this is all that President Trump wants. What he wants is for Claudia in Mexico and for Trudeau in Canada to take action to help support that. So if you want the tariffs to go away, that's the stick, right? Tariffs are the stick. The carrot is help me. It's kind of like the Tom Cruise scene. Help me help you, right? That's all I want. I just want some help here in helping stem the flow of drugs and illegals into the U.S. Stop child trafficking, stop illegal immigration, stop drug flow, stop arms flow from Mexico into the U.S., stop gang flow from the U.S. from Mexico into the U.S. That's what he's trying to achieve. You help with that, the tariffs go away. Now, Trudeau didn't get that, right? So immediately his response was to take and to try to target red states more than blue states, but to take alcohol off the shelves in Canada. And of course, immediately, Texas Governor Greg Abbott responded that said, by the way, the Texas economy is larger than the entire economy of Canada, and we're not afraid to use it. So Justin Trudeau, again, who has already resigned in shame from his administration, hasn't learned his lesson yet, right? So he's trying to fight this fight that he's going to lose at some point, and the question is only when. So the impact to the U.S., what does that look like? Now, as I was saying earlier, the one difference between this time and 2017 was in 2017, or 2018, sorry, when we did the tariffs. In December of 2017, President Trump had introduced the Tax Cuts and Jobs Act, got that passed, and gave tax cuts to the average American. He then followed that up with tariffs in 2018. So taxpayers had relief to offset the risk of higher prices through tariffs in 2018. Now, while he's talked about, again, as I said earlier, tax relief in terms of no taxes on Social Security, no taxes on tips, no taxes on overtime hours, that hasn't been passed yet. So we don't have that tax. Now, we do have the Tax Cuts and Jobs Act still in effect, right? So we still have that. But there's been no new tax cuts to offset the current increase in tariffs as of now. Doesn't mean that's not coming, just hasn't been done yet. Now, the assumption, though, and this is potentially a mistake by Wall Street and by a lot of the kind of the mainstream media, and let's just use an example of something. So we import lumber, a lot of lumber from Canada. So let's just say that, to keep kind of number simple, that, I import some lumber. I import $100 worth of lumber, and now there's a $25 tax on that lumber. Now, the tariffs are not on consumers directly. It's on the importers that bring the product into the U.S. That's where the tariff is impacted. So I'm an importer of lumber from Canada, and and let's say that I import it, and then I'm going to sell it all to Home Depot to sell to you, right? Or however it gets there. So I've got to deal with that tariff as the importer. The question now becomes, can I pass that $25 fee on to consumers? See, this is the issue. See, right now, everybody's assuming that higher prices can be passed on directly to the consumer. Maybe they can. But if you take a look at where consumption is at the moment and look at the savings rate of the average American, how much they're having to spend on credit just to maintain their standard of living, it becomes a much more questionable issue about whether or not those tariffs can be passed on in full, could be some, or none, be passed on to the consumer. We'll talk about the impact of that and where it's going to likely show up and why it is important, especially if you're investing in the stock market. Don't go away.
You're listening to The Real Investment Show.
So welcome back to the show again, and let's talk a little bit about these tariffs and kind of what the implications are. Again, this is all very, new right now. We'll have to see how this works out. Lots of assumptions, though, right? One of the funny ones I saw this morning is tariffs are going to slow the economy but increase inflation. Well, that can't happen. If the economy's slowing down, that's less demand, which means I can't raise prices, so I can't have inflation, right? So the companies have to eat the tariffs and can't pass it on. So this is the kind of nonsense that gets put out there. So just again, you have to kind of work your way through kind of the reality versus what these people think of. And again, a lot of classic economists don't really understand consumer choice and the consumer dynamics that drive the actual economy. And this has been a point they've missed for decades, and why they keep making bad policy choices, because they forget about consumer demand and they forget about consumer choices and how consumers react, and particularly when they don't have any money. So, and that's one of the bigger issues right now, as we were talking about before, is that, as a company is impacted by the tariff, they have a choice or not, and that is to be able to pass on that tariff as a higher price to the consumer. And if they can't pass it on, it impacts their earnings and it impacts their corporate profitability. Corporate profitability is one of the things we want to watch very closely here in particular, because corporate profitability as a percent of GDP is at the highest level on record. It is abnormally high relative to historical norms of where corporate profitability should be in an economy. Corporations over the last few years, the last 3 years in particular, have been able to pass on much higher prices to consumers because consumers had a lot of excess money. That's now gone. Savings rates are now gone. Most of the excess savings are gone. Credit card debt is rising. The ability to obtain credit is becoming more restrictive. Bankruptcies are rising for corporations, and you're in your private space, not your public space. So we're certainly seeing economic stress beginning to form in the economy as all this stimulus money that was injected is now running out. It's run its course. This puts corporations into a fairly tough spot in terms of maintaining earnings and profitability. And one of the big risks that we've talked about over the course of this year is that expectations for earnings this year are somewhere around 18-19% for earnings growth. It's likely not going to be that, particularly now because of tariffs. If I can't pass that on, which is a real possibility, I'm not saying it's an absolute, but if I can't pass it on, if my profit margin on a $100 board, as using our example from earlier, was say 20%, and now it costs me $125 for that same board that was selling for $100 and making my $20 of profit on, all of a sudden, if I can't sell that for $105 to maintain my profit margin, I got problems, right? So if I can't raise that price to offset the tariffs, I've got an issue. Also, don't forget that this is just stick and carrot. This is the same advice that we said last Monday. Don't do anything in your portfolio this morning. Just go play golf today, right? Let the market kind of sort this out. Over the course of the day, the markets are going to sort out kind of exactly what they expect from these tariffs. And we've seen these days before where markets open down sharply like this and then rally back to break even or even positive by the end of the day, because the markets kind of digest the news and factor it into what they expect for future earnings growth and all that type of stuff, right? So the best thing to do today is not do anything this morning. Don't make any knee-jerk reactions this morning because of this news. Don't go sell a bunch of stuff. Just turn everything off and go do something else today. Tomorrow in the morning, we'll analyze kind of how the process was yesterday. Was it orderly? Was it disorderly? What happened with volatility, those type of things. Were any major supports taken out? Were there any major changes? Then that's something we can start to adapt with. If this is something that's building more steam and we're going to have more, further corrections in the markets, then we can start taking action. But we can do a little bit more logically than we can by just reacting to the news this morning. Also, we'll want to know, how do bonds react today? If bonds rally today, then all these concerns about inflation from tariffs, the bond market is telling us probably not the case. Bond market sells off today, then maybe inflation's a bit more of a concern. So we need to watch the bond market as well for a tell as to the impact of tariffs on economic activity, and particularly future economic activity. Is this the game changer for inflation? Maybe it is, maybe it isn't. The bond market will tell us, but we'll know that by the end of the day. This is why today is a good day to do nothing. Just kind of wait, see this out, go do something else, take your mind off things. Don't look at your portfolio every 2 minutes trying to make determinations of stuff, because you're likely just going to get yourself into an emotional swivel and you'll wind up making a bad mistake. The issue with tariffs, a lot of headlines running around. Everybody's kind of throwing out their own, kind of 2 cents worth. Goldman, they're like, hey, these are going to be short-lived. There's going to be a negotiation met between Mexico and Canada at some point, probably the next few days, maybe the next week, and then this will all be over. Bank of America is like, no, this is terrible. They're going to stay here forever, and this is going to cause a major economic reversal. And look, that's a real possibility. There is ample evidence that the economy is actually much weaker than what recent headlines have suggested, particularly on the employment space. And once you dig below that surface on the employment front, it's not nearly as robust as the Fed is looking at. In the recent meeting from the FOMC, Jerome Powell said, well, the employment remains fairly stable. It's good. It's healthy. Healthy employment. Everything's fine. It's really not when you look below the surface. And very likely the Fed is going to wind up on the wrong side of this economic equation at some point in the not so distant future. And particularly now, if these tariffs are imposed and they do remain for an extended period of time, and that's going to have impact on companies, because if I can't pass on the tariff, right? So here's two potential outcomes from tariffs. Let's assume I can pass it on. All of a sudden, everything we buy from Canada and Mexico goes up 25% in price, just assuming $100, right? So everything's $100 from Mexico. So the actual $25 is 25% is $25 on everything, right? So everything goes up 25% from Canada and Mexico. Well, consumers have a choice. I don't build the deck on my house, so I don't need lumber from Canada. I stopped drinking alcohol, so I don't need Canadian alcohol or Canada, ginger ale from Canada, right? The things that we import from them. Same thing from Mexico, right? I just don't have guacamole on my tacos, right? So consumer choice, all of a sudden, they stop purchasing certain items, or they just can't afford to purchase them because they're 25% higher. So if I can't sell those products as a company, I've got a choice. I've got to still sell them. I can still sell them if I sell them at the same price that I was selling them before. So I've got to eat the 25% tariff, which is going to impact my earnings and my profitability. So in order to offset that risk, I have to do what? I've got to reduce other costs in my business, which means I need to lay off workers, cut salaries, those type of things, which increases the unemployment rate in the U.S. So that's the risk the Fed faces if tariffs stay for too long. So the risk of recession is certainly back on the table, depending on how things work out. But again, expectations are that these tariffs aren't going to be around for very long. Again, in the case of Colombia, they lasted 10 hours. So we'll see how just how smart Justin Trudeau is and Claudia and Mexico are in terms of their negotiating abilities, because that's all this is. It's just a negotiation. All right, we'll come back, wrap up the show. Don't go away.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So anyway, tomorrow I'll have an article out. When I get home today, I will kind of run the technicals on the market, see where we are, look at support levels, those type of things. We'll do some kind of highlight analysis on tariffs and just try to put together a bit of structure for an article tomorrow. So I'll have that out for you in the morning, just kind of, how this is going to, and again, we're not going to focus too much tomorrow on the impact of tariffs on the economy, but more on the markets. What does this mean for earnings? What does this mean for corporate profitability? What does this mean technically for the market as well? Again, we'll see how the markets, kind of react today. Right now, futures are down about 660 points on the Dow. S&P's down about 100 points at the moment. The Nasdaq's down about 400 points this morning. So it's going to be a fairly sharp down open. We saw this on the morning last Monday with DeepSeek. And we had that sharp sell-off in the morning, and then markets kind of recovered in the afternoon. So we'll see if that occurs today. And again, this is what I was saying earlier. Just go do something else this morning. Go get a cup of coffee. Go take a walk. Turn off the TV. Turn off your portfolio analysis. Just turn it all off this morning. Don't even pay attention to it. There's nothing you can do about it right now. And then once this kind of settles out over the next few hours, we'll go from there. A lot of stocks are going to get deeply, deeply oversold this morning. There's going to be some buying opportunities in here as well. So we'll want to look for those where stocks have really gotten beaten up on a short-term basis and you get an oversold condition that provides you a good entry point. Again, these are opportunities you won't take advantage of. Again, we have a lot of earnings out this week. So that's going to be moving stocks regardless of what is happening with tariffs and everything else. So, you may have a stock down this morning and this, after the bell today, Palantir announces great earnings and you sell Palantir. I'm just an example. You sell Palantir this morning because it's down 3 or 4% at the open because of this tariff news. And then they report whopper earnings after the bell and tomorrow it's up 10%, which it can do. It's done it before. So now you're kicking yourself for making a reaction ahead of earnings. So again, earnings is going to drive markets regardless of tariff news and everything else. Things can change very quickly in this environment, particularly when tariffs are being used as a negotiating tool rather than an implicit income generator. Now, again, Trump has talked about using more tariffs and reducing taxes, getting rid of the IRS as an example. So you don't pay personal income taxes, but using tariffs and excise taxes to generate revenue for the U.S. We're not there yet. That's not what he's talking about at this point. Right now, these are specifically stick and carrot tactics for reducing immigration flow into the U.S., getting rid of criminal, illegal immigrants that are coming across the border, particularly from Mexico through gangs, cartels. Reducing the flow of child trafficking, drugs, guns, et cetera, that are particularly coming across from the cartels on the southern border. That's the big reason for this. This is all stick and carrot negotiation moment to secure the border. That's his priority number one. Where he goes to after this is going to be a different story, right? That'll be something else we'll look at when we get there. So my point, again, just kind of going back to what I said earlier, just patience today. Let this sort itself out. This is all stick and carrot at the moment. We'll see how the responses are, see how the markets take it. Technically, we've got some really important support levels that are going to come up very quickly. If the markets can hold those support levels, we find buyers that step into the market, probably no big deal. If we start taking out those support levels, we're likely into a larger corrective cycle, which is very possible, given that markets are very extended from long-term means. On a weekly and monthly basis, we're trading very elevated among long-term means. We're at tops of trend channels on a long-term basis. There is a reasonable expectation that at some point we're going to have a 15-20% correction in the markets. Is this the beginning of that? Possibly. We don't know. We'll figure that out. But if we start taking out important support levels, we will start reducing exposure quickly in portfolios. But we don't want to knee-jerk react to it and then make a big assumption, eliminate a bunch of risk in the portfolio today at the open, and then 2 o'clock this afternoon, Trump comes out and says, hey, Canada and Mexico agreed to help us secure the borders and no tariffs. And then this market rallies off 500 points. And you're sitting on your hands going, well, what just happened? Right? This is the problem of reacting too soon and why we just need to kind of wait this out and let the markets tell us where things are going to go. Make sure to like and subscribe to the YouTube channel. We certainly appreciate it very much. And we'll be back tomorrow. We'll analyze what happens today. Tomorrow we'll make some decisions, what we got to do next, and we'll go through this together. Y'all have a great day.